Welcome back to Halftime Report on CNBC-TV18. Well, the North American August truck orders data has come out, and it's actually very good numbers. The North American truck orders have risen to a high of the last 5 months. So it's a 5-month high. 21,400 units of orders came through in the month of August. This compares to just 10,600 units in the month of July, 15,000 in the month of June, and 13,300 in the month of May. So on an average, the orders were anywhere between about 10 to 15,000, and now the orders have gone up to 21,400. Could be the order backlog that is kicking in. But if you look at it on a year-on-year basis, they're still under quite a bit of pressure, although month-on-month basis, the numbers have doubled. Now, there are a couple of companies that have an exposure to North America. There's Ramkrishna Forgings, there's GNA Axles. In fact, we spoke to both those managements. Let's hear out what GNA Axles had to say, a company that supplies to the commercial vehicle sector in North America, and Naresh Jalan of Ramkrishna Forgings as well, about their exposure to North American truck markets and how it will benefit them, the rise that we've seen in the truck orders.
First 2 quarters in last year also we have performed very well, but suddenly in Q3 and Q4 there was a correction in the inventory correction in USA. Then tractor market correction was there, but it is too early to say anything. If it will continue like this, definitely will grow between 15 to 20%. Overall, our export is around 55 to 60% revenue comes from export. Part of that is off-highway also in export, and North America constitutes around 30%, 35% of our total sales revenue comes from North America, whether it is CV and off-highway. And this overall sales will grow 20%, 15 to 20%. This year also our margins have dropped because of very steep hike in the steel and material content, and it has come down to 13.7. But we are very hopeful we'll be able to maintain between 13.5 to 14.5% in this year.
We are not much dependent on Class 8. Overall, I think 23% has come down to close to 10 to 12% only. But what we see right now is the demand is going to be sustainable. But 21,000 number, I will not be able to vouch on. But we feel that the market is pretty strong in the North America and is going to continue to the next year. In Europe, we see some early signs, but I don't think it's going to be a hard landing. We see maybe market may go by 5 to 10% soft, but it was an unusual time right now, and things were very, very strong. I think market going down from here is not going to be very detrimental to overall supply chain, and things are going to be pretty good going into next year also.
Okay, that's some opinion. Just before we move on to the next story, let's pull out the intraday chart of HPL Power. This is a stock that Nimesh spoke about last week in D Street Chatter about a clean out trade, on the stock, a large block. And the stock's been quite active actually after that, 10% higher right now. If you pull out a slightly longer chart, a 7-day chart, I think the move started somewhere around 80 rupees. Yeah, there it is. I think, and it was flat for better part around 77, 80. And from 80 to 96, it's been a very sharp move that we've seen in HPL Power. Of course, in line with the moves that we're seeing in the broader market. The broader market has been extremely strong. And there's so many ideas doing well, especially in the cash market. So many stocks doing well. But let's put focus on the cement sector. Jeffrey.